Welcome to the Monocle Banking Podcast, curated by Monocle Solutions. The African Mining Indaba, Africa's biggest mining conference taking place in Cape Town all this week, has had an incredible energy to it, really underlining the event as the leading platform for deal-making and investment in African mining. Ivanhoe's founder Robert Friedland saying that copper has a very bright future. I mean, he'd talk to his own book, but certainly if you look underneath that, there are very fundamental drivers behind it. Copper having one of those moments where a commodity is really behaving like it should in a world that is looking to build electric vehicles, decarbonize, expand the grid, and roll out very power-hungry data centers underpinning the world of AI. But there's a very interesting question, even at higher prices, can the world actually build enough new copper supply fast enough and cleanly enough to keep the energy transition on schedule? And it certainly brings us to Africa, especially the copper heartland of the DRC and Zambia, where the geology is abundant, but the real constraint is often above ground when you think of power and water and rail and port and all of those things and permitting. Well, to unpack the copper market and Africa's role in the value chain and what might drive the next wave of deal-making and project finance, I'm joined by Thobela Bixa, Senior Research Analyst at Nedbank Corporate Investment Banking. Thobela, great to have you on. I'm just going to ask you as we kick off, you've just finished a session with clients talking all things copper. What's the mood around copper like at the moment? Why now, I suppose, is the big question.
Yeah, I think as you can see in terms of the price, it's been elevated for quite a while and it's remaining to be so. So the mood, I must say, around investors, in particular fund managers, is of cautiousness because where prices are at now, they seemingly are above where fundamentals would suggest. But I think, the cautiousness from an investor side of things is also then coupled with, I think, on the mining side of things and also just looking into the future. On the mining side, of course, there's excitement because prices are elevated, and therefore that implies that companies can invest into this market. And I think overall, you do have those sort of two sides to the story where there's a bit of cautiousness because prices have run hard, very fast. At the same time, you do also have a bit of excitement because there are quite exciting things that are happening within the copper market on the supply side and also on the demand side, like you mentioned.
So then when you look past, let's say, past the day-to-day price noise, which has been, I think there is a bit of speculation out there as well, but what are the two or
100%.
three underlying drivers that best explain copper's long-term trajectory and role in a world that certainly needs a lot more of the metal than we're currently mining?
Yes. There's a couple of things I'll mention. Maybe some are in the short term, medium, and then perhaps also in the long term. So around the short term, I think there is a bit of speculation and the financial muscle that's actually driving where current copper prices are at, in the sense that, we have seen quite a bit of big, large, funds, especially within the macro space, in trying to protect against inflation, which was expected on the back of tariffs. Then people wanted other assets, other hard assets besides, your precious metals such as gold that could protect against inflation. So copper has seen a wind of funds coming into its market. That's, I think, in the short term. And then in the medium term, there's, of course, the issues around perhaps supply not being able to meet demand. I think that's, that we're going to see, I think, over the next, let's say, 3 or so years, we are likely to be in a market that will be in a deficit. And then I'd say in the longer term, it's of course the big, demand drivers such as AI, which are currently small, but into the future, the AI underpin and of course the energy transition underpin is likely to keep demand elevated, which then, those deficits are likely to grow into the future.
So it's often referred to as Dr. Copper, isn't it, because of its industrial usage as a metal. So would you say the market is still fundamentally a China plus global growth story, or has it become more of a structural electrification story first with that kind of cycle layered on top?
I think that's a great question. So when one looks at copper, and like you mentioned, being called Dr. Copper, is for good reasons because copper underlines the industrialization of economies. and copper demand has more or less grown, at pace with, GDP growth, which is your industrial and manufacturing demand. So I think there is that conventional demand, and that is likely to grow with population, grow with GDP. And then, of course, there's, I would say, the new growth areas, such as the energy transition, which is then sort of, if you break it down into electric vehicles, it's the battery energy storages, it's the renewables, it's, all these other sort of new types of technologies. And of course, there's data centers in form of AI, which is growing in terms of its usage. And then more importantly, I think, even though perhaps it's much smaller compared to the other two that I've mentioned, is defense spend, which is growing, whether it's in the US or Europe, because countries have realized that the world that we live in is not as safe as we thought it was, and therefore, yeah, defense spending also is going to be a likely driver of this copper demand. So you have your conventional, which is likely to grow at pace with GDP, and then of course these new demand growth drivers, which are, I mentioned, AI, energy transition, and of course defense.
Yeah, and we know, the Germans are really upping their defense spending with what the US has signaled around NATO. That's a huge signal to where that part of the world is going. If you look fundamentally at supply, producers keep reminding us that price doesn't equal supply in copper. What do you see as the biggest constraints? Is it grades? Is it permitting? Is it capex? Is it social license? Linked to that, how much lingering impact does the Cobra Panama still have on market psychology? For those who might not be familiar with it, that Cobra Panama mine was a massive $15 billion copper project owned by First Quantum Minerals, currently in a state of preservation and safe management, following a court ordering a shutdown in November of the operation, November of 2023. And that accounted for 5% of Panama's GDP and 80% of its exports. So it shows you that there is jurisdictional risk in the supply equation as well.
Yeah, yeah. I mean, I think it's a mixture of all those things that you mentioned. I think grades have been in decline, and that's why there's a whole lot sort of excitement that surrounds, the DRC's copper growth and Zambia's copper growth, because your African, copper supply tends to be higher grade, and therefore higher grade comes with it lower cost. So I think grade declines, globally elsewhere, besides in Africa. That is one of the concerns around copper supplies into the future. And then, of course, in places like Africa, which is the DRC and Zambia, we have seen, above ground issues such as energy security, where that has been a challenge that has, impacted, supply to a certain extent. And of course, I think in jurisdictions such as the US and the world, permitting is becoming an issue. So I think it's all those things. And then of course there is the issue around the changes in government when those things do happen, and what does that imply for certain copper assets, especially given the fact that I think, just over 50% of global mined supply comes from these high risk jurisdictions, which is either in South America and to a certain extent, Africa, the continent of Africa. So I think altogether these things are likely to continue to put, pressure on pricing, because the road to higher supply is actually not plated in gold.
No, I'm sure every pun intended there, actually, Thobela. So when you look at Africa's role in the value chain here, I mean, it was just an interesting aside that our own mines minister, Gwede Mantashe, took umbrage with the DRC minister for doing a deal with the US, citing some kind of African Ubuntu or togetherness. I think it's very naive to think that way personally. I think, we're at an opportunity here where we're dealing with global superpowers who are very transactional, very bilateral, and
Mm,
you've got the
mm,
ability to structure transactions that are really win-win, given that there is
mm,
this desire to secure supply into the future. And if you're not doing that, well, I think you're stuck in the ideological playbook of a different era, different century. But I want to see,
mm.
from where you sit, where do you see the big opportunity for Africa, and particularly the DRC and Zambia at the moment?
So, I mean, I think we have seen an interest in those two countries. I think they, yeah, mineral reserves. and resources those countries, speak for themselves. And therefore, we will continue to have countries, globally wanting to a piece of that pie. And I think it makes sense for those countries to take advantage of the current environment. And maybe another thing to mention is that we have seen also where your big mining diversified companies before, some of them were very clear that they want nothing to do with Africa. But of course, we always have a saying in mining that if the ore body is good, someone will develop it. So there is that sense that, despite perhaps the challenges, especially in the past, around ownership and how much do companies take versus what, the government takes, I think those minerals will continue to be developed, and countries such as the DRC and Zambia can tap into, these companies that are interested in their countries. And therefore, there is quite a huge opportunity to grab hold of the current market where global superpowers are looking for security of supply of these critical minerals, of which they are vast in those two countries. So yeah, take advantage.
Yeah, everyone also says beneficiation in Africa until the cows come home. But what does a realistic investable copper value chain look like in Africa? Are we talking concentrate, smelting, refining, wire rod? Can we even go as far as manufacturing? Or is it still the old model of pit to port?
Yeah, I think perhaps maybe the pit to port is not as attractive. We have seen lots of noise around beneficiation, but I think a caveat to that is the security of energy, right? And in order for you to then move up the value chain, there has to be a sense that, there is proper security of energy, of which, some of these African countries, security of energy is not, 100%. And therefore, there are limitations in terms of how far up the value chains, the countries can go. So we have seen, the likes of Ivanhoe investing in their copper smelter to try and get copper cathodes out. I think for now, that's probably the best, maybe not the best, but that's probably the likely route that we are likely to get up to at this point in time. And then as energy security becomes more prevalent, then perhaps there is a possibility that countries can move up the value chain. But I think the beneficiation challenge or story is likely to remain with us because, of course, as you move up the value chain, there is more income that one is able to get. So, yeah, we can watch the space and see what happens. But our view is that we are unlikely to reach complete or full beneficiation of the entire value chain.
Yeah, I think that's just a realistic assessment of where Africa still finds itself in terms of constraints. But it is interesting, as you mentioned, Ivanhoe's Kamoa-Kakula pushing downstream with its smelting route. If we to look at financing and how projects actually get built from the bank's perspective, let's get a bit more specific. I mean, what are the main financing stacks that you're seeing now? Is it primarily project finance debt? Are we seeing more streaming, maybe royalty, especially at these higher prices, offtake or prepayments? And how do you see these kinds of projects getting funded into the future?
So I think, there's a whole lot of money that is chasing few projects, so to say, in the sense that, there is quite a bit of interest, especially around copper. And of course, there are other critical minerals. So I think what we have seen is your larger companies buying, we've seen quite a bit of M&A, whether we're looking at copper, gold, or other types of minerals. And I think on that, as you see sort of these big mining companies, I think there's a few pathways that they've currently been using to try and, buy into projects. One, these companies, especially your South African listed diversified, they in net cash position, so they can easily do those things off on the back of the balance sheet. We have seen the likes of Exxaro buying into manganese. I mean, Exxaro was sitting at a close to sort of 18 billion net cash. So it can be done on a cash basis. We have seen also debt, and of course, we have seen paper where companies are using their paper to purchase assets because their paper is looking quite attractive, with share prices have rallied behind the high commodity prices. So I think it's a mixture of all those things. And then maybe if you look at the junior level, because of the interest in these critical minerals, I think the banks are a lot more open to open up their taps because we do need some of this supply to come into the market. Otherwise, without it, copper prices and other minerals are likely to skyrocket. And therefore, there is a bit of sort of leniency around, banks, being able to lend into these projects.
And we see the junior space, specifically around the Northern Cape and Springbok, which was traditionally a copper hotbed. And you've got OKIP, you've got Copper 360, you've got Orion.
Yes.
And we've seen some of those share prices really run. Still penny stocks, still fairly speculative. But in today's market, are the banks rushing to set up little satellite offices in Springbok?
I don't think so. I don't think it's gonna happen as yet. But I think what banks are doing is keep a close eye to those companies because there is huge potential. Of course, South Africa is not necessarily, we don't have like big copper reserves, but there is definitely potential in the Northern Cape, given that it used to be a copper producing region within South Africa.
Yeah.
So I think we keeping our hands on the pulse, just staying close to see what transpires there. But of course, with some of these, small companies or sort of junior miners, is the fact that there is quite a bit of risk that is still embedded in some of these things. So if copper prices remain elevated for longer, I think it becomes easier for some of these companies to get finance and be able to then try and speed up their projects and supply into the market. But if the copper prices were to turn, I think we could easily see some of that, funding dry up very quickly. So I think at the moment is really just keeping an eye on some of these companies.
So, if you were to pick one or maybe two things that really improve bankability in African copper projects, what would it be? Are you looking for something of a stable royalty and regulatory regime? Are you looking for a regime that's got credible infrastructure, power, and corridors? Or are you looking at sponsored track record? How do you evaluate what gets put before you as a bank?
That's a very good question. I think first and foremost, it is the regulation or the government or the risk around the jurisdiction. What are the risks that you might put $1 billion into something and then the next day it's gone? So I think, having some comfort from the government side in terms of regulation as to what the regulations of that particular countries are, I think it's very key. And then secondly, it is the ore body. I think once you have those two things working well, I mean, the government regulation being set and the ore body being good enough that you have high grades, it's not going to take too long to develop, from inception to production. And that also the cost of running the mine is actually going to be, let's say, on the lower half of the cost curve. So if those two things are in place, I think, it's easy to bank such projects. And then, of course, things like such as management and credibility, I think they come later on. But
Yeah.
those two things around regulation or politics, and then two, it's the ore body.
And then zooming out at the mega mining deal level, I mean, obviously you've got Anglo Tech, Rio Tinto, and Glencore seem to be getting close to a 200 billion US dollar plus merger before the talks collapsed last week. And it would have created the world's largest mining company. It would have had a control of 7% of global copper supply. So are we likely to see further attempts at cornering the copper market amongst the majors in the next 12 months?
100%. I think we are in a space where it is becoming very clear that it is much cheaper to buy than to build assets from ground up. And therefore, the likes of Glencore, which have, quite good, relatively good copper asset pipelines, I think they become very interesting. And because a lot of these, majors are looking into copper, you are likely to see interest. Yes, Rio had to cancel last week, but I don't believe it's the end. I think, there's more that is likely to come within the space of mergers and acquisition because of the fact that it is easier to buy than to build an asset. To build an asset, I mean, we've seen some of these timelines in terms of, from inception into production. It takes a very long time. And those years have been growing, given the sort of the environmental constraints, maybe financing not so much now. But so it's easier to just buy an asset than to actually build.
Thank you very much, Thobela Bixa. That's where we're going to have to leave it. Senior Research Analyst at Nedbank CIB. If there's one clear takeaway from this conversation at this year's African Mining Indaba, it's that copper is no longer just a commodity trade. It's becoming economic infrastructure. Demand increasingly visible and policy-driven. Supply stubbornly slow to respond, and Africa sits right at the center of whether the global energy transition actually gets built or bottlenecked. Well, thanks for listening to the Monocle Banking Podcast, curated by Monocle Solutions. If you've enjoyed the conversation, you'll find more episodes unpacking the forces reshaping banking, capital markets, and the real economy wherever you get your podcasts. I'm Michael Avery. Until next time.